If you search the phrase stock market on YouTube, the results you get are shocking. Correction, crash, big trouble, surviving the crash. There is a clear theme among the recommended results. It's a bizarre world where the S&P 500 is up nearly 24% this year alone, but everyone on financial YouTube is pushing panic and fear. So why is this theme sold on this platform, and why is it so disconnected from the facts? It's no secret that this channel plays this game as well, but before you click off and call me a hypocrite, there is an explanation and legitimate reason for all this financial YouTube nonsense. We start with the fact that there is a crash occurring in the markets, but it's not represented well via the index. It's occurring in a pocket of the market, and as you will see throughout this video, it's on shaky ground. In real life, most conversations involving stocks don't include boring Buffett companies, but rather high-flying names like AMC, GameStop, Tesla, and Coinbase. A lot of these popular names have been getting decimated this year thus far. Take for an example ARK, which holds many of these companies. The ETF is down nearly 40% off its highs, and it seems to be heading straight to zero. For a lot of younger speculators who pour their money into these types of investments, the market has crashed through the prism of their holdings. But that doesn't tell the full story. There is another element to this. Without a doubt, the events occurring around the world today, especially in finance, are bizarre and unprecedented. Fear is in the air, and the crash video phenomenon on YouTube is also a simple reflection of human psychology. It goes back to how we are wired as a species, one that enjoys watching car crashes, serial killer documentaries, and natural disasters. In media, the saying goes, if it bleeds, it leads, and YouTube media is no different. If we are being perfectly honest, I'm a finance commentator who attempts to make money via ad revenue based on views. My titles and thumbnails reflect what is wanted by the algorithm, which is ultimately what is wanted by all of you. Although my titles and thumbnails may not match my actual content perfectly, I attempt my best to include facts and current events related to today's market. For watchers of this channel, I'm no expert, and predicting the exact moment a crash will happen is impossible, but there is something to be said about today's wild market. Every week we watch as stocks go up and up, a direction that remains unchanged since 2009. Not even COVID could bring down this market, so one has to ask, is this a true reflection of the mighty American economy, or could it be possible that the Federal Reserve, who happened to expand its balance sheet 10x in the last 12 years, has something to do with this? Just look at all the shocking events that have occurred recently. Inflation is the most obvious. What was originally nothing to worry about turned into transitory, and now it's officially acknowledged that everything the Fed was saying was wrong. The American people were handed envelopes full of money by the government, and when inflation happened to occur, the root of the problem was never the money printing, but rather everything else. To this day, if you ask Jerome Powell whether stimulus checks had anything to do with the decimation of middle-class buying power, he would look you straight in the eyes and say, no. So while traditional media could play this off as a mistake, I speak before you today and say it's intentional and clear. Jerome Powell has degrees from Princeton and Georgetown. In his head, he knows exactly where this is going, but due to the nature of his job and his $45 million net worth, he's unwilling to say the truth. The Federal Reserve is destroying the dollar, and soon the party will ultimately end. The evidence for this is overwhelming. By the Fed's very own measures, inflation is at 6.2%, but that official number is highly controversial among skeptics. The government has a vested interest in keeping inflation low, so the methodology used to measure inflation has changed dramatically over the years. By 1970 standards, inflation today would be much, much worse. If you look around at the prices of common goods, the evidence is overwhelming, and soon people will begin to question why a Chipotle line cook makes almost the same amount of money as an entry-level IT person. Meanwhile, at the same time, housing prices are up 20%, car prices are up 30 to 40%, and nearly every other commodity has seen similar price action. The facts on the ground are very different than those presented to politicians in Washington. We are getting to a point where lying about the state of the economy is impossible, as the general public can feel the pressure of inflation on a day-to-day basis. At the end of the day, when we decided to lock down the country and pay those who lost their jobs, two things happened. Millions of people received envelopes full of money for nothing in return. They of course spent that money either on the market or on goods. This in turn jacked up demand and therefore prices, but it also ruined the supply side of the equation. The millions of people who were laid off caused factories and warehouses around the world to stop producing, which led to shorter supplies. Combine that with what I said earlier about demand, and you have essentially a perfect inflationary storm. Now, instead of returning to normalcy, we have politicians who think the answer for these problems is more money printing. Thank you guys for watching. As always, please make sure you hit that subscribe button if you enjoyed. Also, if you could please take a minute and check out my new channel, which I have placed in the description below.